All right, so we had another big earnings week this week. Some big companies released. There's a lot of companies I want to go over. First things first, the market had a very nice week this week. The S&P was up about just under 5%. The NASDAQ was up just over 5%. Again, literally every day it went up. So did we hit a bottom last week? Honestly, nobody knows for sure. But again, the S&P is up again on the month. The NASDAQ's up again on the months. And it looks like that, downturn that we had starting, was it the 17th of October, and it looks like it finished the 27th of October. So the last couple weeks, or the last week or so, was a very nice up week. Again, nobody knows what's going to happen here. Anything could happen, right? I mean, for all we know, we could see some big crash come out of nowhere, right? I mean, look at what happened in 2020. So nobody knows what's going to happen for sure, but if you look at the Fed, the market, the next move in rates, the market is projecting it to be a cut, not a hike. So that's good news, right? And to be frank, this is just my opinion, right? I'm no expert, but I don't think earnings were all that bad coming out of the last couple of weeks, even though the market was going down like it went down 10% in a matter of about a month or so, right? So I didn't think things were that bad, and yet, for whatever reason, there were some reasons behind it, right? But I don't think things are that bad, right? I mean, and if you look at the consumer, if you look at a lot of things, nothing is that bad. Now, again, there is obviously reasons to be concerned, but a big problem that people run into is that they always think that the next crash is going to be similar to the last crash or the crash before that, right? And when you look at market crashes, they're virtually never the same as the last one, right? So people who are saying, oh yeah, there's going to be another housing crash, it's like insanely unlikely that's going to happen, right? So there's almost always, in fact, virtually always, different catalysts that cause the crash. So and that's why it's so unpredictable. I mean, look at 2020. The housing crash. Yeah, people were predicting that, but it wasn't like an overwhelming thing ahead of time. So that's something to keep in mind, but no one knows what's going to happen. My prediction is I think we're going to close things off. I think we're going to go up. Now, again, are we going to hit up new all-time highs? I would say that probably does not happen until we get a definitive, we're cutting, we're hiking. We're in recession, we're not in recession, right? Now, again, the market is always forward-looking, right? The market is always forward-looking. So the only way that we're going to see a very significant change either way would be as if we get something completely unexpected, right? So my strategy is always and never changes, right? If you want to be a successful investor, you never care about short-term fluctuations. All you're doing is, frankly, the best strategy is to dollar cost average into good businesses. That's all you need to do. You don't care about short-term price fluctuations, and you also the main thing you want to care about is valuations. Number one, you want good businesses, and number two, you want good valuations, because there's a lot of good companies out there that are really overvalued, and if you buy them, the chances of getting good returns go down drastically because you're paying too much, right? So let's get into earnings here. The first big company was Apple. Apple beat earnings and revenue. Apple probably is the best of the big tech companies. Again, a lot of people are going to disagree with that, but in my opinion, Apple is the best. Again, they're the biggest, but I think that they're the best. If you look at them on the week, this is the month here. Let's go to the week. They were up actually fairly nicely, right? So again, Apple did good, and again, given you had Google that did not perform as well, Microsoft performed very well. The big tech companies have been kind of shaky so far, but this I think is good news because Apple is, I believe they're the biggest company in the world. The next one is AMD. AMD also beat revenue and earnings. They were up very nice on the week as well. Actually, incredibly nice. How much were they up on the week here? AMD was up 16%, which is just crazy, especially for a company that's over $100 billion, right? They're a large cap company. So again, more good news here. So let's get into the next company, McDonald's. Also beat earnings and revenue. McDonald's, let's see, McDonald's. So again, they were up a little bit on the week, which is nice. If you look at them on the year, they haven't done as well. But again, they were actually down briefly on the year recently. They're actually up basically thanks to the last little bit. They're up 1% on the year. But I mean, at one point they were down about almost 7%. So McDonald's is not a company that I'm super interested in. They're going to be okay. Like McDonald's, again, absolutely, I would be absolutely shocked if they weren't bigger at a higher price 10 years from now than they are now. The problem is they have limited room for growth, right? They do have limited room for growth. And that's my one concern there. The next one is ANET, Arista Networks. They beat earnings and revenue. This is a company that I really like. I think it's a really good company. The problem is their valuation, which isn't actually crazy considering how much they're growing. But again, a price to free cash flow of 43, price to sales of almost 12, just a little bit too much for me. If they came down, I mean, below 40, below 10, I think that's probably when I would start to look at picking it up. But again, even at those valuations, you'd still need to see a lot of growth to grow into that valuation, right? And again, this is also a company that's basically at its 52-week high, which is very impressive, especially considering how the market has done recently. This is a company that has not suffered at all. They're just a consistent uptrend here. I mean, let's go back even 5 years. Again, yeah, consistent uptrend. They're still well above their 2021 highs, which a lot of companies have still not hit. Right? I mean, the NASDAQ hasn't hit, the S&P hasn't hit. A lot of these companies have not hit, which is very impressive. So this is a company I definitely would have on a watch list. The next one is ON Semiconductor. They beat earnings, missed revenue, and then they lowered their guidance, right? And this is why they were hit so hard. Again, this is another thing you really need to watch out for when you're looking at earnings is if companies raise or lower their guidance, because that's basically their projections going forward. The earnings that come out, honestly, it doesn't have, and it should not have that much of an effect. The most important thing is what's going to happen in the future. So when a company says, yeah, we project, top line to go up or to go down, that's concerning or a good thing, depending on which one. So that's the thing that you really want to keep an eye on when companies release earnings. The next one is SoFi. Again, this is a company I used to own. I just don't think they're good enough right now. I mean, they're growing nicely, but just not quite good enough for my liking. They did beat earnings, mainly given they have a big student loan portion, which again is people are now repaying, so that they've done better recently. The next one is Amgen. They beat earnings, but they did miss revenue. That's not the right ticker symbol here. This is a solid company. Again, they're not quite good enough for my liking, to be honest. They are basically right around their historical valuation. So if you were looking to pick it up, you probably could start dollar cost averaging here. But again, these drug/biotech companies, I think that there's just better alternatives. Not that this company I think is solid, but I just think there's better alternatives. So again, it does have a nice dividend. I think you're looking at 3.1%. They're growing 10% per year. Which is very nice to see. They've also outperformed the S&P. So again, it's a very solid company. I just think there's a little bit better alternatives, in my opinion. The next one is Caterpillar. Again, I really like Caterpillar. They beat earnings and revenue. So again, very solid company, in my opinion. They were actually down on earnings, which is kind of surprising. But again, it will happen. They're actually down slightly, even on the year, I think. Yeah, they're down slightly year to date, but again, over the long run, I think that this is a very solid company. Again, the amount of infrastructure that's going to be needed to maintain the West is very high. So I think a company like this is going to do well. Although, again, I don't think you're going to see crazy performance. The next one is MSCI. This is a company that I was looking at getting into at some point. They beat earnings, missed revenue, although it is up year over year. Like I say, I think that this is a pretty solid company. I do want to get a position at some point. I'm just waiting for a good time to buy, essentially. The next one is Paycom Software. This is another company I've started to buy over the last little while. It is down quite a bit recently, which is why I have started to pick it up, because again, I think it was down a lot on earnings. It was down, wow, it's down 38%, which is just crazy. Even though the problem here is they lowered guidance, right? This is just what I mentioned recently. They lowered guidance, and that is a big problem, right? And the reason for that is even though they're growing nicely, they're not growing as nice as what they originally projected, which is why they got hit so hard. So again, you do have to keep an eye on these growth companies, because yeah, they could be growing nicely, which they are growing very nicely. The problem is that if guidance gets lowered a little bit, they're going to get hit really hard. And I mean, right here, I think that they're at a pretty good valuation, right? Price to free cash flow of 32 for a company that's growing as good as they are. I think it's a buy where it's at. Just my opinion, though. The next one is going to be Pfizer. Again, don't own, and I don't know if I ever would own, because I don't think that they're in a great industry. It's an industry that's very unpredictable, and I think you have to be pretty up and up to. You've got to do a lot of research, because again, if these companies have some of these big drugs that are coming off patent, that can hurt their earnings a lot. And again, another problem with these companies too is that if they have some drugs where they really hit it big on, and then all of a sudden they come off patent, and the price comes down, these companies are going to look cheap when in reality they're not cheap. So I think that it's hard to value these companies, is what I'm trying to say. The next one is Airbnb. They did beat earnings and revenue. A lot of people like Airbnb. I'm not a fan necessarily, because I don't know their long-term issues. I think regulation is a concern, and I think competition is also a really big concern, which is why I'm not a holder. The next one is IIPR. I do like IIPR a lot. I do have a pretty good size position in this company, which my average basis, I believe, is below 70, so I've done pretty well. Again, this is a company where my dividend yield on cost is, I think, like 10.5%, which is incredibly good. Not only that, I'm up about 15% or so. Again, they are a marijuana REIT. Again, they beat revenue and FFO fairly nicely, which is why they're up fairly nicely. And again, if you look at their FFO payout ratio, it's only 76%, right? So this dividend is, they're okay, right? They're going to have some things go wrong for that dividend to get cut. And not only that, they've been growing that dividend nicely over time, right? And this is only a $2 billion company. So not only are you getting a nice dividend here, I think that they still have room to grow. Now, again, you do have to be careful, right? Definitely don't chase dividends, but I like this company. I think it's worth the risk for sure, in my opinion. The next one is Norwegian Cruise Lines, which I don't own. I don't think I would ever own, but I like to watch them because I think they're a decent barometer for how things are going. They beat earnings, but they did miss revenue. So that is Norwegian Cruise Lines. The next one is ConocoPhillips, which I do have a position in. I think they're one of the better oil and gas companies. They beat earnings. They announced a dividend increase, so good news as far as that goes. The next one is DraftKings, which also did good here. So if we look at DraftKings here, they beat earnings and revenue, and they raised their guidance, and the stock just took off because of that, right? They're up. What are they up on the week here? They're up like 25%, which is just crazy. So the problem here is that they still don't make money, right? They still don't make money, and a good rule of thumb to go by, unless you're willing to do a lot of research and take a lot of risk, is don't invest in companies that don't make money, because they're inherently very risky, and if you don't know what you're buying, it's an easy way to lose a lot of money, right? Just my opinion. The next one is EOG Resources, which is one of my top 2 or 3 favorite oil and gas companies. Net income up. Basically, everything did good here. This was a good earnings report for them. They were up a little bit on the week, which is nice to see. But again, like I say, probably my top 2 or 3 oil and gas companies for sure. I do have a pretty good sized position, which I will keep dollar cost averaging into. The next one is Fortinet, which is down a lot recently, similar to Paycom Software. If we look at this company just this week, they're down 12%. I mean, they were down 17 at one point, which is crazy. If we look at them over the last, let's look year to date here. I mean, year to date, they're actually up very small, but at one point, this company was up 66%. Now they're only up 4.5%, right? So massive turn of events for this company. I mean, and from their all-time highs, what are they down here? They're down 37%, right? I still really like this company, right? I'm not super concerned. And to be honest, I just started dollar cost averaging. Basically, this last downturn, when it was down around 55, I bought a tiny bit, like not even 0.1%, like literally like $50. I think it was maybe like 1 share. And I'm going to keep dollar cost averaging. As long as this company stays at a reasonable valuation, I will keep buying because they're growing insanely quick. Their profitability is through the roof. If we look at their valuation, the price of free cash flow is 20. For how fast they're growing, I think 20 is a steal of a deal. So I will keep buying this company until that price of free cash flow is like 35 or even 40, right? Just my opinion. So the next one here is going to be Palantir. Again, this is a company that a lot of people like to watch. I've never bought it because I don't even know if it's profitable yet. It still isn't profitable. So that's something that is concerning to me. They did beat earnings and revenue. So that's good to see for Palantir. What did they do on the week here? It looks like they were up. Yeah, they were actually up very nicely. So congrats if you just bought Palantir. The next one is QLYS, which is, again, somewhat similar to Fortinet and Paycom Software. This one easily beat earnings and revenue. They absolutely destroyed. They just hit a new all-time high, which again makes me happy because I've been dollar cost averaging this company for like 6 months or so now. Again, very, very good company in my opinion. Although, what is their valuation right now? Just out of curiosity, considering they're up so much recently. They are above their historical numbers, at least on a price to free cash flow and a price to sales basis. But a price to free cash flow of 32, I still don't think that's crazy, right? If they went above 35, that's probably my cutoff, right? That's probably my cutoff. So again, I will keep an eye, but again, I think a good company nonetheless. Again, a few more to go here. Shopify, again, another one that a lot of people like to watch. Shopify, they beat earnings and revenue. Again, this company's too expensive for my liking. If they came down, I mean, they'd have to come down to like 25 for me to want to buy, but solid company nonetheless. Another company that I'm starting to buy here, given they've corrected recently, is Skyworks Solutions. Again, another very solid company in my opinion. They beat earnings and revenue. They also announced record operating income, which is very good. So, I mean, year to date, they're actually down a little bit. Actually, they're basically flat. But again, I mean, if you look at from their yearly highs, they're down about 28%. So this is definitely a company that I'm going to be buying going forward because I think they're I wouldn't say cheap, but they're definitely below fair value in my opinion, right? I mean, if we look at their valuations here, a price to free cash flow of 10, a PE of 13, like those are like, slow grow like numbers. Their profitability is very good. The growth is okay. But again, over the long run, there's going to be massive demand for companies like this. So definitely buying this company. The next one is Starbucks, and the last one, they beat earnings and revenue. This is a solid company, I think, although not quite enough for me to want to invest in. So that is earnings for this week. If you liked the video, please like, comment, subscribe, and stay tuned for more.